Hello and welcome to your September Investor Update. I'm Pacome Breton, I'm Head of Portfolio Management at Nutmeg. In this update, I'll cover how August was both a typical quiet summer month, as well as one of the most exceptional Augusts we've seen in a long time. And secondly, I'll review why an off-the-radar town in the US became the center of the financial world. Financial markets in August got a lot of media attention, but things seem normal now. Can you explain? If you were lucky enough to disconnect and relax by the beach this August, or were caught up in the spectacle of the Paris Olympics, you would be forgiven for thinking that nothing major happened this month. The FTSE 100, the UK's main market for large equities, ended the month up 0.9%. In the US, the Nasdaq gained 1.2%, while the S&P 500 was up by a respectable 2.4%. Similarly, in the bond market, British gilts were moderately up, and many major risky asset classes had low positive returns. And of course, that's how the story ended, but some markets had an extremely volatile journey to get there. The largest movements were in equities between the 1st and 6th of August, a very short period for a market correction. Japan's main equity index, the Nikkei, was at the center of these corrections. Within 3 days, the Nikkei lost 20%, culminating with a loss of over 12% on Monday the 5th, and it's the largest daily loss since Black Monday almost 40 years ago. Other markets were impacted, though to a smaller magnitude. The Nasdaq lost around 8% between the 1st and the 6th of August, and the FTSE index around 6% over the same period. The lesser-known VIX index, which is used to measure fear and uncertainty in US equity markets, had its second largest same-day percentage increase since the index began in 1990. And this meant a short and sharp increase in expectations of future volatility before experiencing its second largest decrease in percentage terms the very next day. So what's behind these dramatic movements? Explanations aren't always clear-cut, but I want to differentiate the short-term triggers from the longer-term roots. In the short term, a few events around that period stand out as potential causes. First was the US Federal Reserve's press conference on July 31st, which outlined lingering inflation but an improving job market, followed on August 2nd by a relatively poor job report. This sparked fears that the US economy could be in a worse shape than previously anticipated. The second factor was the Bank of Japan's largely anticipated policy rate increase to 0.25%, the highest rate in almost 16 years. Then, over the weekend of the 3rd and 4th, Warren Buffett's US conglomerate, Berkshire Hathaway, announced it had reduced its position in Apple, creating headlines that technology stocks were potentially overvalued. However, we believe the major cause was one we have been watching for some time, the so-called yen carry trade. While many major currencies, including the US dollar, euro, and British pound, saw rate increases in the last 3 years, the Japanese yen was an exception. Many investors were therefore borrowing in Japanese yen at a very cheap rate of around 0% and buying other assets, especially in the US, which could earn around 5%. And think of this like an elastic band. If you stretch it wider, slowly, the snapback can still be pretty brutal. And this is exactly what happened with the short-term macroeconomic news, triggering a sharp reversal and investors selling assets to reimburse their yen borrowing. Such events are hard to predict, and what's fascinating in this case is how quickly things return to business as usual afterwards. Did you change Nutmeg portfolios during this unusual period? Well, we were not lying on the beach this month, fortunately, and because the market correction was actually a great opportunity to enter a number of markets, we increased our equity positioning as prices had drifted lower during the sell-off. And this included the Nasdaq in our actively managed portfolios. We also rebalanced our fixed income allocation, taking a small profit on behalf of our clients. It was positive to benefit from this volatility, and especially given how quickly things normalized. At the end of August, we increased as well our allocation to UK small cap stocks, which we think is currently benefiting from a more stable political and economic landscape versus other regions. What happened at the Jackson Hole Symposium and why does it matter? Every August since 1981, Jackson Hole, Wyoming becomes the center of the financial world as it plays host to the Symposium of Central Bankers. And this year was particularly special as Jerome Powell, the chair of the US Central Bank, confirmed that the Fed will start its rate cutting cycle. And while it's still unclear by how much and how fast, this indicates the fight against inflation could be behind us for now, both in the US and more globally. And this is a positive step for fixed income assets and equities in the long term, which we'll discuss further next month. Thanks for watching. If you have any questions or suggestions for a topic you'd like us to discuss in next month's investor update, you can contact us via social media, email, or in the comment section below this video.